Yes, am I audible?
Yes, Nitish, yes. I just need to change my video settings.
Sure, but I can see you and I can hear you as well. Very good morning.
Great, yeah.
Yeah, so I just made you the presenter to test the topic. So just to briefly introduce Srijoy. So Srijoy has done his MSc Finance from London Business School and he has done his BTech from IIT Kanpur. Srijoy has more than 15 years experience in quantitative analysis and research that includes areas such as derivative pricing, market and credit risk, and has worked in India, USA, and UK in a variety of roles in international banks and consulting firms. So his more recent projects over the last 4 years include model risk assessment of counterparty risk models and regulatory stress testing, CCAR, EVA, etc., models for leading investment banks. Further, he is a thought leader and a scholar who likes to connect with, influence, and inspire his audience through writing, speaking, lecturing, and debating, and using world-class network of resources that include theories, best practices, and subject matter experts. So thank you so much, Srijoy, for joining in. And before I hand over the session to you, just to give a basic lowdown on how we would go about today's session. So as you all know, the session would be probably about for 1.5 hours, out of which Srijoy will be speaking on the topic for about 45-50 minutes. And post that, we would have the Q&A. So please feel free to post all your questions in the chat window or the question section, as I have requested earlier also. We would be happy to take up all the questions as much as we can. Right. So with that, I will hand over the session to Srijoy. Srijoy, just I'm making you the presenter.
Sure. Thank you, Nitish. Nitish, please let me know if you can hear me well.
Yes, we can hear you loud and clear. We can see your screen. So we are absolutely good to go.
Thank you, Nitish. So thank you, everyone, for being here today. I know it is a Sunday, and I really appreciate for giving your time to this webinar. And I'm very humbled by the introduction that Nitish just talked about. I would say I am a trained financial engineer, and I started my career in financial engineering in my mid-20s after I finished my IIT undergrad, and then a few years I worked in the industry in different areas. But now I am 40 and above, so I can say that I have seen this industry evolve through various ups and downs. And I'm here to talk about that, talk about financial engineering. And plus, I would also like to say that I have been associated with Nitish and Abhijit for a decade, I think over a decade now. Of course, last many years I've been teaching as a visiting faculty at the IIQF. It's always a pleasure to come back and do a webinar for Nitish and Abhijit, and especially IIQF. Because I remember in my younger days when I started my career in financial engineering, just to set the context before we take a deep dive into the slides that I have prepared for the audience today. I sort of knew, and everybody knew, that financial engineering was, as a field, was mainly confined, limited to very elite set of practitioners who were, PhDs or in mathematics, economics, and maybe computer science, and they were sort of very limited few such people were there who would work in very top tier banks like the Goldman Sachs, JP Morgan, Merrill Lynch, Lehman Brothers, which is no more now, And I'm so happy and glad to see that fast forward 20 years, and this is 2023, and IIQF brings to all of you a bouquet of certifications, which allows every student and a professional from different walks of life to have access to the theory and practices of financial engineering, right? And that is an amazing thing that I've seen that has happened, and I'm really glad to be a part of that journey. And plus, I will just like to say two more things before I again deep dive into the slides today. I'd say finance, touches the life of each of us, right? Especially in an aspirational society, and we are, as a country, India. I mean, I heard Narendra Modi also make that speech in the U.S. House of Congress some weeks ago. We are number 5th economy in the world, and we have climbed up to this position. It's a very proud position, and now we are expecting the country to become number 3 or number 2, right? And behind every progressive and aspirational economy is a strong financial system, right? That goes without saying, because US, Europe, you look at any industrialized, advanced economy of the world today, you will be, it's an obvious thing to see that financial system plays a major role in the growth and the development. Plus, the innovation in finance also plays a very, very big hand, right? So this is where we are standing today, and our country is has this aspirational bunch of population, people who look forward to grow and progress economically. And we are seeing digitization of banking, insurance. I think earlier panelist presenters, Nitish, correct me if I'm wrong, also presented about the BRICS, the emergence of BRICS, and also the US dollar losing its reserve currency power. So a lot of shifts are happening at a geopolitical level, at a economic level, and at various levels, right, globally. So we are at that point, and I would say that for me, finance plays a very important role in my own life, like starting from personal loans on car, whether it's my mortgage or your mortgage, or whether it's you're managing your money, investing in the stock markets, or investing in bond markets, or investing in a portfolio of securities, or be it insurance, right, buying insurance products, or be it running your own business as an entrepreneur. So finance plays a big role, right? The second point I want to touch here is the hard skills. And as we go forward in this journey, post 2023 towards 2030, 2050, I would say data will play a big hand, right? So hard skills here imply that, let's say person A has brings in the knowledge of business processes, strategy, marketing, and sales. If that person can also enable himself or herself with hard skills of analyzing data, identifying trends, and rolling out new business products, new business models, and sort of helping the business to streamline its work processes, transform the business models. That's where your value will lie as an employee, or even as a leader in your own organization, right? So finance and hard skills will come to play a very, very important role in the next 20-25 years of this country, right? And I'm glad that Nitish and Abhijit are a part of that journey. But without further, Nitish, can you just see my slides? I will just jump into my slides.
Yes, absolutely. We can see yours.
I will just change the mode to presentation mode, and please let me know if my slides are not visible.
Yes.
Okay.
Yes, we can view that.
Thanks. So in short, today's agenda, I will, as I said, all these different topics essentially are linked to financial engineering. So we'll try to understand who a financial engineer is. And I know many of you in the audience already are familiar with financial engineering, but many of you would not know what financial engineering is all about. So all these slides were put together, keeping in mind a certain sort of section of audience who are willing to know more about financial engineering, as well as certain section of audience who really don't have much awareness of financial engineering and maybe want to learn a bit more about it before one decides to maybe take a foray or a jump into this field, right? Like the way I can imagine myself 25 years ago, or maybe 20 years ago, right? So we will start with who is a financial engineer and what is financial engineering all about, and then we'll discuss a bit about the role financial engineering plays in the financial industry. It plays a very important role, and we'll see that. And then we'll outline the essential skills and the educational background needed for a typical career in financial engineering. I will discuss a list of interesting career paths and opportunities that I have myself witnessed along my journey in this field. But of course, let me say that there are many multiple opportunities which we may not know that might unfold in the next 2 decades. And plus, of course, I'll wrap up by discussing a bit about the current, more recent industry trends that are affecting this field of financial engineering and how financial engineering itself is playing an important role in the more recent innovations that are happening around in the financial services industry. Okay, so starting with the definition first, I'm being a financial engineer, I'm a bit strict adherer to definitions. So let's start with the definition of financial engineering. So financial engineering can be defined as a application of mathematical, statistical, computational techniques to design and create innovative financial products, strategies, and solutions. It involves combining concepts and methods from finance, mathematics, statistics, and computer science to analyze and optimize financial instruments and systems. So let's broadly discuss the role of financial engineering in the industry, taking into context the different solutions and financial products and strategies that a typical financial engineer is involved with. So innovation and product development. Financial engineers play a key role in designing and developing new financial products such as derivatives, structured products, risk management tools, by leveraging mathematical and computational models to create innovative solutions that address specific financial needs and provide risk management capabilities. Risk management and hedging. Financial engineering is instrumental in managing and mitigating financial risks. Financial engineers use mathematical techniques to quantify risks, construct hedging portfolios, and develop risk management frameworks for institutions to minimize exposure to volatility, interest rate fluctuations, and various other risk factors. Quantitative analysis and modeling. Financial engineers use mathematical and statistical models to analyze financial data, forecast market movements, evaluate investment opportunities. They develop and refine models that capture the behavior of financial instruments, markets, enabling better pricing, valuation, and risk assessment. Structuring and optimization. Financial engineers are involved in structuring financial transactions by applying structured finance techniques to create tailored solutions for specific client needs, such as securitization and asset-backed securities. We'll discuss a bit about this in the coming slides as well. Technology and algorithmic trading. With advancements of technology, financial engineering has expanded its scope to include algo trading and automated investment strategies such as high-frequency trading and quantitative investment strategies that leverage computational power to exploit market inefficiencies and generate returns. Moving on. Role of financial engineers in different sectors. So we will discuss here mainly the primary financial sectors like investment banking, asset management, hedge funds, insurance, and of course risk management that actually cuts across all these different sectors, right? So in investment banking, especially trading, Financial engineers are involved in developing and implementing trading strategies to generate profits for the bank. They use quantitative models and algorithms to analyze market data, identify trading opportunities, and execute trades. They specialize in areas such as algo trading, market making, quantitative research, and derivatives structuring. In asset management, financial engineers contribute to portfolio management and investment decision-making processes. They use quantitative models and risk management techniques to construct and optimize investment portfolios and analyze market trends, valuation models, and risk factors to make informed investment decisions. They also develop asset allocation strategies and manage investment products such as mutual funds, ETFs, etc. In hedge funds, financial engineers employ quantitative and computational techniques to identify profitable investment opportunities and focus on areas such as quantitative research, systematic trading, statistical arbitrage, or risk management. They use sophisticated models and strategies to generate alpha and manage risks. In the insurance industry, financial engineers contribute to the development and pricing of insurance products. They analyze historical data, mortality tables, actuarial models to determine insurance premiums and assess risks. They use mathematical models to evaluate and manage risk exposure, such as pricing life insurance policies or analyzing catastrophic event risks. Risk management. Now, risk management we already discussed in the earlier slide. And just to add one thing here, risk management does, as a function, cuts across all the different sectors, be it investment banking, trading, or asset management, or insurance. So financial engineers play a crucial role in risk management across various of the sectors of financial industry as discussed. They develop models and methodologies to identify, assess, and quantify, and also monitor risks such as market, credit, operational, and liquidity risks. They contribute to the development of risk management policies, stress testing, and scenario analysis. We will talk about climate risk management and how very recently climate risk management in one of the later slides is playing an important role in the stress testing of the financial institutions. So with that, so far we have sort of come to the discussion around the key aspects of the role, or rather the benefits that financial engineers play in the financial services industry, and how that how that plays a role it plays not only in terms of the innovation and financial products, or be it, let's say, the various functions within the financial industry, financial services industry, or be it the various solution areas, but also within the specific sectors, how financial engineers play a very important role, right? Now, let's talk a bit about the essential skills and the educational background of a typical financial engineer. So financial engineers require a combination of technical skills and knowledge in finance, mathematics, statistics, and computer science. And this sentence, if you would sort of really sort of recall that the first slide talks about this particular aspect, right? So it is a very multidisciplinary field, and therefore that kind of aligns with the kind of skill sets and educational background that would make typically any individual successful in this field of financial engineering, right? So if we read from this slide from left to the right, so we'll discuss first the educational background, and then we'll go into the 4 key skills, which I would say are the key skills that would make a typical person successful in a career in financial engineering. Now, of course, success doesn't mean that, success has many different definitions, but I would say these are the necessary skills that would be required for any individual to become successful in financial engineering? Of course, we know that to become very successful, you need other factors as well, right? That goes without saying. So in terms of educational background, a strong foundation is typically built through a bachelor's degree in relevant fields such as finance, mathematics, stats, economics, or engineering. And I have seen also, I will take an exception later when we discuss to the Q&A, that there are exceptions where bachelors from other fields like commerce and economics, which are less commerce, or let's say less science-oriented fields or STEM-oriented fields, have also been successful, right? But those will come as an exception. Many financial engineers also pursue advanced degrees such as a master's or PhD in financial engineering, mathematical finance, quantitative finance, or a related field. And these programs provide in-depth knowledge and specialized training in quant finance and financial modeling. So let's now look at the different skill sets that make up the portfolio of a typical financial engineer. So quant skills, financial knowledge, programming skills, and of course, communication and business acumen. Under quant skills, a strong mathematical foundation involves a strong and solid understanding of calculus, linear algebra, probability theory, and differential equations. Statistical analysis involves a proficiency in statistical methods such as time series analysis, regression analysis, hypothesis testing, which are essential for analyzing financial data and developing models. Optimization techniques such as knowledge of optimization theory and techniques that will help in constructing efficient portfolios and optimizing investment strategies, which is particularly specific to the field of portfolio management. Stochastic calculus. Let's move on to programming and computational skills. Proficiency in programming languages such as Python, R, C++, or MATLAB is very, very crucial. And IIQF definitely, Nitish will talk about this a bit more, focuses a lot on the programming and the implementation aspects. And in my journey as a financial engineer, I learned C++ a lot more in depth after I became a financial engineer, rather before when I was a undergrad from IIT. So I can sort of vouch for that, how important programming as a skill is in this field. Financial software and tools, familiarity with the financial software and data analysis tools and libraries like Pandas, NumPy, and TensorFlow would be very, very advantageous. And this is particularly important for those who are in the modern age. I would say Python and all these Python-related libraries like Pandas, TensorFlow, and NumPy have become very popular, and they're very, very useful, right? And we can see that they are being very widely used across the financial services industry, especially in investment banks, or be it hedge funds, where these programming tools are being used to develop algo trading models, or be it risk models, or valuation and pricing models. Finally, under programming computational skills, we are also seeing the emergence of a very specialized field called algo and high frequency trading, where the knowledge of order execution algos and algorithmic trading platforms and market data analysis will be very, very valuable. And we will talk about this a bit later. Let's move on to financial knowledge. Under financial knowledge, understanding of financial markets should have a very comprehensive, that includes a very comprehensive understanding of financial markets, the products, let's say understanding, interest rate products, or be it equity products, or be it the hybrid products, or the credit products like credit default swaps, or be it the commodity products, right? Financial markets, one can sort of, all of you would be familiar with equity markets, or the stock markets, the bond markets, right, or the commodity markets. So all these sort of the knowledge of all these aspects would be very, very crucial, right? Risk management and knowledge of risk management principles, including value at risk, stress testing, modeling various risk methodologies, will be very, very crucial for assessing and mitigating financial risks. And thirdly, asset pricing. So familiarity with capital asset pricing model, arbitrage pricing theory is very important for valuation of securities and investment products. Finally, I will touch upon communication and business acumen. And I have, in my last panel discussion, I remember last year, I did particularly touch upon this aspect. Why? Because what I've seen is that in the industry, as a financial engineer who come from very, very quantitative backgrounds, they need to sort of, they tend to underemphasize their own communication abilities and skills. And it is important that a financial engineer in today's day and age have this strong communication skills to convey complex concepts to both technical and non-technical stakeholders. Right? It is a very important thing. I'll touch upon this when we have the Q&A session. I hope somebody will ask a question around this. And the second aspect is the business knowledge or the business acumen, as I say it. So as a financial engineer, while you are developing models, right, you are working closely with the traders or the risk team, it is also important to have the big picture. And the big picture here means to have an understanding of the entire business process, right? How your model, let's say, is impacting not just the trading, the very specific, trading desk, but also how it plays a major role in the risk management, a major role in the, let's say, the financial reporting of a bank, and in the overall the overall strategy of a typical financial institution, right? So that would involve also developing an understanding of the economics, accounting, and the business principles of a typical financial institution. Okay, and lastly, I would say we kind of, after discussing all these core aspects of educational background and the skills, the technical skills and the business acumen and communication skills, I'd like to say that while expertise through a combination of formal education and practical experience is important, certifications will play a very, very significant role, especially certifications like FRM, CFA, QFRM, or CPFE that is provided by IIQF, right? This will be very, very crucial for your ongoing upskilling and professional development. Moving on to career paths and opportunities. So I will just quickly pause here and maybe ask all of you to just read through this slide. I have listed out a few financial engineering career paths, the career roles. There are many here, but these are the most representative ones. There are many here, I'm sure. And I would like to start with the quantitative analyst because almost 15 years ago I was a junior quantitative analyst myself when I started my career, and I was known as a quant. So I worked closely with the traders in my work field, and I was responsible for building quantitative pricing models, also models to do pre-trade, pre-settlement risk analysis, and then post-settlement risk analysis like VAR, DV01 exposure model reporting, or be it CVA and counterparty risk and all that. So all those were different parts of my job responsibility. Okay, but as a quant, you also work closely with portfolio managers and you analyze market data, right? And also conduct research to identify profitable trading opportunities and assessing risks, be it a part of an investment bank trading desk or be it a part of a hedge fund or a portfolio, a wealth management desk, for example. Okay. In my current role, I'm closer to that of a risk manager because I work closely with my clients and advising them on model risk policies and model risk processes, right? So risk managers develop risk management frameworks, policies, and procedures to ensure the risk exposure is within the acceptable limits, and risk managers assess market risk, credit risk, operational risk, and liquidity risk by utilizing quantitative models and risk assessment techniques. A lot of quants, a lot of my batchmates also started their careers with hedge funds, and they have become portfolio managers now. And as a quant, you have a lot of opportunity to use quantitative models and techniques in portfolio management and decision making as well, right? And in addition to all these three career paths I discussed, there are also very specialized career paths like structured finance. For example, you also find quants or financial engineers working in structured finance, and more recently also in algo trading and high frequency trading, right? Some of my colleagues, they actually entered the field of structured finance many years ago, and they've become experts in that, and they've mainly focused on applying mathematical modeling techniques to building securitization products. Let's say you have, you know, the very famous CDOs or the collateralized mortgage applications and various other kinds of structured products, which are like hybrid products, for example, total return swaps, or be it range accrual swaps, which are designed to provide attractive returns to the investors by synthesizing using different underlying instruments, for example, equities or commodities, or you have combination of interest rate, FX, and equity and all that, right? Algo trading, high frequency trading also is a very emerging area, and a lot of quants are getting employed there, and they're finding very useful career paths in that particular field. Again, these are very specialized areas. I'll just quickly pause for maybe for a few seconds. Okay, so let me now just move on to the industry trends and innovation. So here I'm discussing mainly just three trends, and of course the climate risk management is closer to my heart. I will maybe spend a bit more time on that, maybe 2 to 5 more minutes if time allows. But of course, let's look at how financial engineering is affected by this machine learning and AI. The new trend, which revolves around machine learning applications and AI applications. So financial engineers are using machine learning algos to analyze large data sets, identify patterns, and make forecasts for asset pricing, risk management, and portfolio optimization. Natural language processing techniques are applied to analyze news sentiment and social media data for sentiment-based trading strategies. And I personally know a friend of mine who actually has his own startup, and they build all these sentiment-based indexes, which they sell to the various hedge funds, who in turn sort of use them to create investment strategies based on social media or market news sentiments, right? Reinforcement learning algos are being explored for autonomous trading and optimal execution strategies, and these are examples of neural networks, right? Recurrent neural networks. And even there are more sort of sophisticated, maybe sort of branchings of neural network techniques that are used in autonomous trading and optimal execution. Financial engineers are developing sophisticated algos that consider individual risk profiles, goals, and preferences to deliver personalized financial planning solutions. A good example is a Zerodha, right? All of you would be familiar with Zerodha, and also you can Google around about a very interesting startup, which is Robinhood. So this is again these two sort of are classic examples of applications that allow personalized investing, right? So you can trade on stock market, you can create your own portfolio through your mobile apps. Okay, fintech and blockchain technology. As I said, I mean, in the very start, fintech will be here to stay, and for the next 2 decades, blockchain and fintech are going to completely revolutionize this financial services industry, right? So blockchain technology has a potential to transform processes like settlement, clearing, record keeping by providing a decentralized and secure transaction system. Those who are familiar with blockchain technology will agree with this particular point, right? And financial engineers are exploring application of smart contracts, tokenization, and decentralized finance platforms for creating new financial products and improving operational efficiency. So there will be a future where the banks or the governments will not play a major role in let's say, settlement of trades like swaps, or be it any kind of financial product, right? So blockchain and fintech has this potential to completely decentralize the settlement and the clearing process. Plus, also they provide the benefit. If some of you who are familiar with this technology of blockchain would agree that they provide the benefit of of security, right? They have strong security protocols, which cannot be, for example, you cannot commit a fraud. I mean, it's very difficult to commit a fraud, which is quite possible when somebody can impersonate you while you are transacting over a payment or any kind of settlement with a bank, right? So there are all these interesting applications that are that financial engineers are involved with in the field of fintech and blockchain technology. And finally, climate risk management, which is very close to my heart. This has gained prominence as ESG, as all of you can sort of find more about ESG factors that are increasingly integrated into financial decision making. So Morgan Stanley has its own ESG ratings platform, which allows investors to choose and pick stocks which are high on the ESG factors. And this is becoming increasingly sort of a trend, right? And those firms which are not high on ESG are getting sort of disadvantaged, right? So all these interesting sort of developments are happening in the investment industry. So financial engineers are developing models and tools to quantify and manage climate-related risks, such as physical risk or transition risk associated with a shift towards a low carbon economy. We'll talk about this just in a couple of minutes later, right? Climate scenario analysis, stress testing, and incorporation of climate data into risk models are becoming important considerations in risk management frameworks, where financial engineers are playing a very, very important role. So that brings me to the end of today's discussion. I will just spend maybe, Nitish, how are we doing on time? I'll just check if we can maybe add 5 more minutes to discuss a bit about climate risk management topic.
Yeah, we are absolutely on time. I mean, not only 5 minutes. I mean, please feel free to actually spend 10 minutes if you want. So we would be happy to have those insights.
Thank you, Nitish. So thank you, everyone. So I just want to bring this. I understand a lot of you would not be very familiar. This is a very new topic, but let me just just bring up the most highlights here. The key is 2023 is a very, very momentous year for climate risk management, right? I'd say that because in 2023 the US Fed, for the first time, this is for the first, because climate risk has been there. So over the last 5-7 years, many of you would have heard about the Paris goals, right? The 2 degrees and all that 1.5 degrees goals, right? Low carbon economy, sustainability, and various carbon pricing policies. So all these things are there, and ESG, of course, right? But 2023 is very significant because this is the first time that the US Fed, which is the US central bank, right, has put together a pilot climate scenario analysis exercise for the first time for all the major the 6 financial institutions of US. So those are as you would know, Citi, Goldman Sachs, Morgan Stanley, JP Morgan, and Wells Fargo, right? So the purpose is to learn about these large banking organizations' climate risk management practices and challenges, and B, to enhance the ability of both large banking organizations as well as supervisors, right? Which includes the US Fed as well as all the other central banks around the globe, to identify, measure, monitor, and manage climate-related financial risks. Okay, so I will just spend maybe a couple of minutes to just introduce all of you to what exactly is climate risk. And it is very peculiar because the thing is, the key distinction between climate risk and let's say a typical financial risk like credit, market, operational, is that the climate risk is it doesn't directly it doesn't directly impact a financial portfolio. It indirectly impacts through what we call as transmission channels, right? And how is that? So just to sort of underline that particular concept, climate risk drivers could bring about micro-prudential risks, which here means credit, market, operational, or liquidity, right? The standard financial risks to the supervised financial institutions, which manifest through a variety of transmission channels, right? So for example, physical risk is a typical type of climate risk, right? And they would include hurricanes, let's say wildfires or floods. And there would be, there are, in the climate risk taxonomy, there are two types of physical risk. One is acute, another is a chronic. The chronic is what we know as the temperature rise and the sea level rise, and the precipitation patterns changing over time. So these are more long-term impacts, right, which happen over multiple decades. And physical and acute risk are examples of very, very extreme weather events like hurricanes and droughts, which are actually increasing in frequency nowadays, as you have witnessed in Himachal, in northeast part of North America. So there are all these major hurricanes and floods and all these extreme weather events happening there, right? The other type of climate risk is the transition risk, and this is mainly driven by policy. Okay, so for example, the carbon pricing, the carbon taxes, caps on greenhouse gases, or a government policy to to enforce clean energy, for example, right? Or a shift to low carbon products, right? So we are seeing that in UK and US, a lot of these residential properties are now putting heating systems which are low carbon, right? Very soon we'll see the same things happening in India, and we are actually witnessing a lot of products being replaced with low carbon products, right? So those are examples of transition risks. Now, what are the transmission channels here? So we are talking about essentially the micro and the macro channels. So when we talk about micro channels, we're talking about individuals or businesses, right? So clearly, climate risk drivers will impact they may cause, let's say, for example, property damage, right? They may cause changes in the values of the assets and the liabilities, or even they may cause shifts in the business activities of corporates, right? So all these sort of eventually translate to what we call as micro-prudential risks, right? So for example, I will just go to this slide here, right? Here we are looking at the physical. If you see this particular flow chart, right, on the right, so it is an example of physical risk impacting the financial economy, right? So we start from the left with what we call as sea level rise and more frequent storms, right? So as we know, the climate change is resulting in sea level rise and also the more frequent flooding and hurricanes in the coastal areas. Okay, so the coastal properties therefore get affected because of greater risk of current and future flooding, and that leads to lower property values, right? And now these lower property values have an impact on the financial economy. How is that? So the banks or the originating mortgage banks, they sort of have to face the devaluation of these properties. And actually a lot of interesting empirical analysis and study has been done, especially in US, where they have shown that almost 7%, the sea level rise has impacted a 7% decrease in the value of the coastal properties, especially in the states like Florida and all those low-lying areas. Okay, and the max has goes up to even 24%. Some of the coastal areas actually at such high risk of flooding, where the property values have gone down by almost 14 to 17%. Okay, now what does that do to the banks? So clearly it affects the credit risk, the credit worthiness, right, of those portfolio of mortgage assets. Plus, Also, a very interesting observation was done by a few researchers that the SLR risk is not is not sort of directly factored into the into the secondary markets. So if you guys understand the concept of the whole process of securitization, right? So there are two markets there. One is a primary market, which is the mortgage originators market, and then there is a secondary market where actually the CMOs and then the securitized products are sold and bought, right? So now a very interesting research was done where the sea level rise effect was shown that it is not currently being factored into the risks within the MBS or the the securitized residential mortgage markets portfolio, right? And that is a very interesting aspect because the reason being the local mortgage originators are not able to sort of or rather they don't want to reveal the data, the local data about the sea level, the impact of sea level rise or the frequency of the increased frequency of floods and all that to the secondary market. So that information asymmetry is a very interesting problem that remains to be tackled, right? And in this second flow chart here, we kind of highlight what are the different data requirements, right? So for example, to model the sea level rise, a typical financial engineer would have to gather weather data, right? Climate models, topographical maps, so which sort of relate to understanding the vulnerability of all these climate risk drivers, data on the flood defenses, etc. Right? Now, from there, in the financial economy, right? So one would need to have an understanding between the linkages, right, of the sea level rise to the effect on the valuation of the various financial instruments, like be it mortgage loans or mortgage bonds and all that, right? And then, of course, in the secondary market, one would have to also build a model to sort of to understand the correlation between the SLR risk and various other various other risk factors. Let's say the interest rate risk, or be it the in the mortgages there is also the default risk or the prepayment risk and all that, right? So these are the very interesting challenges and aspects that lie in front of a typical financial engineer who is working on climate risk management. Okay. And just to come back to the CSA exercise, so the purpose of this exercise is essentially to take up a sample portfolio of loans, especially I think portfolio of residential loans, residential mortgage loans, and then look at the impact of the various climate risk drivers like physical risk and transition risk on the financial metrics like PD, LGD, and the credit ratings of these portfolio of mortgage loans. Okay, so that's sort of in a nutshell is the is a quick sort of snapshot, rather a quick snapshot of how climate risk management is evolving and what sort of roles financial engineers are playing in this area, and how sort of what kind of challenges are there in front of a financial engineer to model climate risk and to sort of model the various transmission effects of the climate risk into the financial risks, right? So I'll pause here, Nitish. I think I sort of have come to the end of my presentation, and maybe over to you,
Oh,
Nitish.
wonderful. Oh, wonderful, wonderful. I mean, that was like a very insightful session as always, Srijay. And before we go into the next section of Q&A, right, we would have a brief introduction on, like, again, though Srijay has very kindly mentioned about the work that IIQF is doing, but we would like to just like briefly for maybe like 2-3 minutes mention about the exact nature of like how we are trying to promote the quant finance and quant analytics and financial engineering risk management and all this field in India for like more than a decade now. So yeah, and after that we'll have the Q&A. Hope that is okay with everyone. All right, so I will not spend much time. We would be going back to the interesting discussion that we were having with Srijoy. A lot of questions that has come up, but just to give all of you a brief idea about like the work that we have been doing. So many of you who have been regularly participating with us in our this deep dive with experts webinar series over the years, they mostly know about us, so I will not dwell much, but just to give a brief introduction. As you all know, I represent Indian Institute of Quantitative Finance, and we as a body will specialize in education and training in the field of quantitative finance, financial engineering, risk management, quantitative algorithmic trading, artificial intelligence, and machine learning. We have been working tirelessly to promote the field of quantitative finance and financial engineering in India for more than a decade. It's almost 14, 15 years now. I mean, when quant was a very less known commodity in India, so we have been tirelessly trying to promote, and maybe we would try to do a little bit of self back patting. Again, maybe like we have been in a small way, we have tried to, we have been a part of the overall the quant finance journey in India, right? And in our effort in promoting this field, and we were founded by pioneers in India and top experts from the field of financial risk management, financial engineering, and investing. And I mean, again, you may all of remember, many of you may already know, but just to reiterate, we have very deep, comprehensive certificate courses which prepares candidates for different roles related to this advanced quant analytics, financial engineering, and related roles in the industry. So just to brief, there are like about 5-6 courses that we do in terms of certificate programs, and then which are all done through live and interactive sessions on the weekends, which are essentially targeted at people who are working. Of course, students and also do. We, in fact, for students, we do provide scholarship to help you to join this the programs, and like again to get an entry into this field. So though these are like weekend programs, I mean, professionals definitely can join, but even students who are interested in making a career in this field, they can also join. So to start with, we have a course called Certificate Program in Financial Engineering, a 7-month weekend program, which is a comprehensive course which deep dives into both theory and practical modeling for derivative valuation and risk management. Then we have a course, Certificate Program in Quantitative Finance and Risk Management, another 6-month course, which is a course that deep dives into both theory and practical modeling for derivative valuation and risk management. We have a course called Certificate Program in Machine Learning for Finance, and this is something, I mean, it's a very important area nowadays in our field of advanced financial analytics. Machine learning plays a huge role. So there's a specific course for people who want to learn machine learning, particularly as applied to finance, right? So a course designed for teaching machine learning and data science in context of applications in finance. And then for those who are interested in like learning and making a career as an algo trader, we have a couple of courses for them as well. There's a 6-month course called Postgraduate Program in Algorithmic Trading, which teaches all aspects of algo trading using technical analysis, machine learning, and quant models. And then we have a shorter course on algorithmic trading for 3 months as well, that teaches end-to-end all aspects of algorithmic trading using technical analysis, right? And over the last 1.5 decades, we have been very fortunate to have a lot of industry professionals and students who have used our course to make I mean career in financial engineering, and some of them have been kind enough to mention their thoughts on our courses, not to showcase or advertise our courses, but this is just to make you aware of how you can use our courses if you are really interested in making careers in financial engineering and quantitative finance, machine learning in finance, or algorithmic trading area. So I mean, you just like them, you can also use these courses to make your career in this field. We definitely, our courses, I can vouch for the fact that this absolutely makes you job ready for in finance, right? So yeah, I mean, we have just brought out few of the thoughts that like some of the students have shared, right? Go to our website, see through all of them, the thoughts that they have shared, how they have utilized these courses, right? And I mean, of course, you can connect with them also through LinkedIn and otherwise. So if you wish to discuss how you can utilize. So the courses that we teach, these are the target companies or the profiles are like, again, these are courses which you do to succeed as financial consultant or become a domain expert and lead quant teams of international banks, top hedge funds, and or Fortune 500 financial consulting firms. You can be targeting hedge funds like Renaissance Technology, D's or Citadel, Millennium Partners. You can be going to investment banks like Goldman Sachs, Morgan Stanley, Deutsche Bank, or in commercial banks like JP Morgan, Citibank, Nomura. And if I may add, I mean, in case some people, I mean, can go to like, I mean, even why not even the domestic banks as well. I mean, SBI and I mean, even the private banks like ICICI, HDFC banks and as well, right? I mean, they also are doing good amount of work, particularly in the risk management area. You can go to stock exchanges like NYSE, NSE, etc. It can be in the consulting firms like Ernst & Young, Deloitte, PwC, etc. I mean, even the IT companies, they also do a lot of projects related to the financial BFSI sector, particularly for international banking. So you can target those teams as well in MNC IT companies like Accenture, Cognizant, TCS, to name a few. And the types of positions or jobs in quant finance and risk management, I mean, you can go into quantitative research and analysis. You can be in development of quantitative and analytical softwares. You can be building valuation models. You can be in model validation teams. You can be in portfolio management. You can be in portfolio analytics. And of course, in all the areas of financial risk, market risk, credit risk, operational risk, liquidity risk. And if I may add here, international regulations also, regulatory areas, which is also like a huge area nowadays. Derivative structuring, quantitative trading, HFT trading, algorithmic trading, derivatives trading, etc. Right? Again, I mean, pretty much we have worked with most of the companies and the banks that work in this space. This is just like a very small set of examples, right? So we have conducted more than 6 lakh man hours of training in financial engineering, quantitative finance, investment banking, risk analytics for large MNC and Indian financial institutions. As I said, just like a small subset of people who have worked with BNY Mellon, Thomson Reuters, Capgemini, BSC, LIC, NSC, Citibank, Globob, Society generally, to just to name a few. We have in our endeavor to promote this field with students, so we have worked with a lot of educational institutes as well, to name a few: IIT Bombay, BITS, Pilani, NITI, etc. And I mean, yes, anybody wanting to know more about us or wanting to contact us to know more about the field in general or the courses that we do, I mean, our website, you know, all, I mean, maybe like, again, it's iiqf.org. I mean, this is the contact number. You can email us at info@iiqf.org, right? So without further ado, I mean, of course, we can take up more questions regarding the courses and all. I mean, we can connect one-on-one, but for now, a lot of people actually have put up their questions. So let's take up the questions one by one. So Srijoy, I will be collating and reading out the questions, and then I'll request you to address the Q&A accordingly.
Sure.
Sure, thank you. So first question is from Sridhar, and he wants to know what is the difference between quantitative trading, quantitative research, and quantitative development. I mean, this is like a question. Yeah, I mean, a lot of people can find it useful. There are a lot of people have this like kind of confusions regarding these terminologies.
Okay. Can I just repeat the? I think I heard quantitative trading, and then you
yes,
said
I'll repeat.
Okay.
Yeah, what is the difference between quantitative trading, quantitative research, and quantitative development?
Right. Interesting question. I think it's more of the taxonomies, and of course I'll just to give a disclaimer that the taxonomy in financial engineering world is always evolving. So there is no fixed taxonomy in this area, right? So
right.
Because it's a very creative field. So quantitative trading, Nitish, I think in my view is mostly applicable to portfolio management, especially nowadays we have wealth management and portfolio
Right.
together packaged rather. and also maybe applicable more towards hedge funds, right, which employ all these statistical arbitrage and high frequency trading strategies. I think compared to the earlier days, we also have portfolio managers who focus more on traditional techniques like analyzing balance sheets, analyzing doing bottom-up analysis, which is also called as fundamental analysis or value investing, so to speak, which is less quantitative, right? So
Right.
that sort of strategy in portfolio construction is more traditional, whereas quantitative trading is more aligned to statistical arbitrage and applying all these quantitative models and quantitative algorithms to trading strategies, which we actually also discussed a couple of them on one of my slides. Now,
Right.
quantitative research development, Nitish, is more about the taxonomy related to a typical function, a role of a rather a day-to-day work of a typical quant, right? So a quantitative developer would be someone who is more involved, let's say, in developing the models, right? So those models could be risk models, could be valuation models, or could be pricing models, right? Whereas a quantitative researcher, what I've seen is typically a group of quants who would focus more on the portfolio research side. So typically these guys would be looking at the data, looking at the various sort of data sets. Nowadays, you apply all these machine learning techniques and AI techniques also. So they would be looking at this data, identifying profitable trading strategies. I don't know if this sort of distinction, helps answer this question.
Oh no, I think that's pretty much answers the question. And like again, Sridhar, if you have a follow-up question, you can put up. We will maybe again take it up. But again, that definitely was like a, good explanation on that. Thanks so much. So next question is from Richard. He's from Ghana, and he mentions that he is a mineral processing engineer with 15 years working in gold mining industry. He has asked, how can I transition to become financial engineer and career progression and availability? Yeah, I mean, a little tricky question. I mean, because he has been working in 15 years in a very different field. But yeah, any suggestions for him?
I think, Nitish, I have seen, as I said, the slide that I showed, I don't know if I can actually represent those slides again.
Yeah, you can. I mean, you can. Can I make you the presenter if you want to show?
That would help.
All right. Let me again make you the presenter.
Thanks. I just bring up some of my slides, Nitish. I think I'll just maybe just add to what I presented on this career paths and opportunities. Nitish, I did not show two things here. One is, let's say, how these roles map to specific sectors. For example, a risk manager, Nitish, can be mapped to any sector, right? Be it insurance,
Yes.
or be it, let's say, hedge funds or asset management, or let's say investment banking, right? Whereas a portfolio management niche is typically mapped to asset management or hedge fund. So what I've seen is the other thing I did not discuss is the evolution, right? So I started as a quant analyst, but now I'm more of a risk manager. So to answer Richard's question, I'd say if Richard has the good understanding of the market, let's say that he comes from as if I recall correctly, he mentioned that he comes from a background with some sort of a process experience of commodities or maybe markets sales, some sort of a functional experience of the
he's a mineral processing engineer working in the gold mining industry. Yes.
So clearly he brings with him the skills of understanding the business processes, right? As an engineer, of course, and of course he would be, I assume he would be also, be very closely involved with the whole business model of that particular industry. So I've seen a lot of folks who come from, let's say, energy sector, right, with a good understanding of the energy, how the energy businesses work, and the energy
Correct.
product. So clearly, Richard would have a good understanding of the product side of things, right? So I've seen, for example, in energy sector, a lot of such professionals have moved on to become portfolio managers,
Right.
right? And sort of, or take up roles in investment banking where it's more sort of an advisory type of role to the, to the M&A, right? So where they
Absolutely.
kind of, they kind of bring in their the product experience, the engineering experience, and sort of, which is also very critical when you are evaluating mergers and acquisitions, or when you're evaluating stocks of companies which kind of, are in the business of metals trading, right, or in the business of mining, for example. So I would say
Right.
that would be, one sort of example. Of course, in how to get there, Nitish, I think maybe you can add to what I'm trying to sort of, say now.
Yeah, and I mean, I will
How?
try actually on the to help him as well. But I mean, before that, actually, I mean, down the line, I saw that like he has put up a follow-up question as well. So essentially, he has asked like, his actual goal is to become a quantitative online trader working from home. So basically, he wants to become a quant trader actually. So I mean, anything you want to
Perfect.
add in that context?
Perfect. I think great. So I kind of I think he's very so thanks for that, Richard, because that sort of tells us that you have a clarity in terms of your roadmap. So how to get there? I think Nitish, you can maybe add more there. I would say
Sure.
take up some quantitative courses. Or, as I said, the key skills, Nitish. If I go back to my key skills here, one aspect is financial knowledge. Other aspect is programming and computational skills. And the third aspect is
Absolutely.
quant skills, right? So I think what
Correct.
Richard needs to focus is to bring together all these three aspects. So understanding how the trading market works, right? And then understanding what are the different quantitative models that are behind these sort of trading strategies, right? And then having the skill to also implement if need be, right? But of course, a lot of these, I'd say, for traders specifically, there are a lot of these platforms, online platforms, which provide programming and computational sort of, they provide these, trading strategies in a package. So maybe the
Correct.
traders don't have to do too much of programming there. But of course, I mean, if you want to also, develop programming skills, then then you can be more flexible. Then as a trader, one
Yeah,
can be more
absolutely.
flexible in implementing their own strategies. I
True.
hope that answers the
True.
question. Yeah.
Yeah, that pretty much answers the question. And I mean, yeah, very briefly, I just would like to add, and then Richard, I mean, would of course would be happy to connect one-on-one and maybe guide you in more detail. But just to add to what Srijoy has said, I mean, he rightly mentioned. So essentially, you need to pick up the skills. I mean, if you want to become a quant trader, so first thing would be to pick up the quant skills, right, or the financial engineering domain knowledge, right? I mean, you may look at courses that we also do. I mean, in financial engineering, as I mentioned during my brief intro about IQF, that's a very comprehensive course which deep dives and can guide you on the domain knowledge of financial engineering. Of course, you can build on top of that, and then it gives you the adequate and knowledge in the relevant finance areas, financial modeling for valuations of derivatives, pricing, risk management, which gives a good introduction to the quant areas. And then again, of course, if you also want to add to that the trading skills, I mean, you may look at this algorithmic trading courses that we or other people do, right? So these are things actually. I mean, you may not learn everything from courses. I'm always a little hesitant of mentioning to anyone to do multiple courses actually, right? I mean, but yeah, but the domain knowledge of like the quant side, that is something I am very clear. I mean, it's very difficult to get that the entire knowledge from Google. I mean, I understand Google or like again general online sources would have a lot of knowledge, but to get it in a collated single area, right? I mean, or like in a what do you call it, in a channelized planned manner is very important. Otherwise, you might end up spending a lot of time and then still not maybe able to learn the things as it should be, because what to learn is also very important. I mean, it's very difficult to understand what to learn, right? And then, of course, some of the areas, I mean, it's not available in general open source literature in Google and all. Some aspects you would be well served if it is taught by somebody with an industry professional. So yeah, I mean, the financial engineering course from us or anybody else, again, if it's a good financial engineering course, definitely would be the right start. And then on top of that, again, if you are already a programmer or you use programming, then again, using all that knowledge to develop your trading skills and all, you can do on your own, or like again you can take somebody else's help to learn about algorithmic trading as well. As I said, I mean, would be happy to discuss in more detail on one-on-one, but for the sake of other participants and the paucity of time, maybe I can go on and on. So then we would like to maybe that's the summary actually, and then again hope that answers your question. And as I said, we would be happy to take it up one-on-one. So and let's go to the next question. Which is from Bhaskar, and he says that I'm working with a fintech as more of a generalist role across credit, operations, and product. I don't really have a technical background, but only a finance background. Want to understand how difficult it is for people with no technical background to good quantitative finance opportunities. Yeah, so would you like to answer that question, Srijoy? Shall I
Yeah, I
repeat
think
the
Nitish,
question?
yes. I think I heard that question quite well.
Sure.
I think Nitish, in the last year's webinar, we received similar type of questions. I will
Yeah,
say
absolutely.
I just didn't catch the individual's name.
Well, his name is Bhaskar, Bhaskar Pandey.
Bhaskar. So I think Bhaskar, so what you have as your strength areas is a strong understanding of the business process, right? So assuming you're working on the fintech side, let's say, on the loans, you could be working on certain specific products, maybe loan products or insurance products, or credit products, right? So what you can sort of, what you bring as a strength is the product knowledge and the business process. Now, you will have to identify where you can sort of, either in the same organization, you can upgrade your quant skills, right? And basically, I would say for you, 1A, you can try to build your data science skills, because I'd say in fintech, increasingly there are financial engineers or the product developers. They're using data, right, to identify different trends, to come up with new product offerings, or let's say to come up with better risk management techniques, right? Or be it sort of to streamline their existing business processes. So that's where you can add a lot of value. So
Right.
I think, Nitish, why don't you articulate some of the data science specific focused programs that
Yeah.
I offers, and there are a lot of such similar programs, I think, available online, I'm sure, right?
Yeah, absolutely. Absolutely. Yeah, I mean, and he has a follow-up question as well. I'll take this question and then the next question also I will just maybe read out and then again take it up both together. And then if I miss out something, you can also add back again, right? So he also mentions that in a later question he mentions, and also what would be a recommendation between choosing a master's in finance engineering, quant finance, or a generic finance master's with a quant certification. All right, so let me start answering that. And again, as I said, Srijoy, you can actually add to that, right? So first thing is to continue from what Srijoy was mentioning, right? So Bhaskar, as Srijoy rightly mentioned, the companies or the sector that you are working, fintech, right? So I mean, rather than general quant finance, I mean, maybe learning about machine learning, data science, and then applied to finance will be a more useful skill for you, given what you actually what you are doing, right? So I mean, you maybe you can concentrate more on like courses related to machine learning and data science, right? Whether it is in finance or in general, that is for up to you to decide. Of course, if you are learning machine learning, and since you are working in a finance firm, fintech firm, right? So learning machine learning in context of finance will be more useful. That is the line of courses which can be more useful. But yeah, I mean, if you are specifically interested in learning more about deep about financial engineering or quant finance, being a finance professional, you may look at a course called certificate program in quantitative finance and risk management that teaches quant finance absolutely in the way where finance people would find it the most useful. right? So that is something. Or else if you can concentrate on like learning about machine learning related areas, which I think would be more useful, you can look at a course called Machine Learning for Finance, Certificate Program Machine Learning for Finance. These are two courses from our list of courses that you can look at. Of course, I mean, there are a lot of multitudes of courses, maybe like if I'm not exaggerating, there are hundreds and thousands of machine learning and data science courses nowadays. I mean, you can look at somebody else as well, but why I recommend our courses, because this is like machine learning in specific to financial applications, right? So for you, this will be more useful, but then it's up to you. But yeah, I mean, I think that learning in context of machine learning will be more useful at this point of time. And if you are really interested in going into deep into the quant side, then you can look at a quantitative finance and risk management course. Now, to answer your next question, recommendation between choosing a master's in financial engineering or quant, or a generic finance master's with a quant certification, my take would be that if you really want to do a master's, then go for a master's in finance engineering specialization or a quant finance specialization if you are interested in quant. General finance masters, to be honest, even if they have like a quant module here and there, what I've seen is, I mean, the depth of coverage is not like to the level that actually you would need to go into a quant or a risk management field, right? So if you are targeting this field and if you want to go for a master's, then I mean, go for a master's which actually would specialize in the area that you're looking. In fact, actually nowadays there are a lot of options to do masters in machine learning and data science. Again, sorry for the sake, I mean, I'm reiterating that point, but again, given your overall profile, learning more deeply about machine learning and data science actually would be more helpful quant to learning about quant or generic finance at this point of time. That is what I think. But yeah, I mean, masters is something which generally is like a lot of commitment in terms of leaving your job and like going for like again 1 or 2 years. There are part-time masters as well, right? But again, masters is more of a commitment. But again, if the same thing you can do it along with your job in a certificate course, that actually can also be a good option, right? So that's how it is. And again, would be happy to discuss in more detail one-on-one. I mean, if you wish to, we can connect with me. I mean, my numbers. We have already shared, I mean, in this page, and again I would be happy to share again, right? You can connect with us and we will be happy to discuss. Anything you would like to add, Srijoy, on this?
Sorry, Nitish. I think you have covered it very well. Very nicely answered. Thanks.
Wonderful. So then quickly going to the next question. Okay, so this is also one common question which a lot of people ask, and I think again we can quickly add to that. I mean, now all the questions that we'll be taking up a little quickly, because it's like already almost 1:30. Maybe we'll extend by 15 minutes more, but we'll take up all the questions very quickly now, right? Because there's some more questions remaining. So Tanay Bose has asked, is financial engineering similar to actuarial science? Would you quickly answer that?
Yeah, I think great question. I think actuarial and financial engineering have a lot of overlap. The probability theory, the statistics, the matrix algebra, linear algebra, a lot of things are quite common, especially the probability theory aspects and the and the stochastic processes and all that.
Absolutely.
However, actuarial modeling is more applicable to insurance domain. So I think if you recall the slide that I presented on the sectors and financial engineers play what kind of roles within specific sectors, you'll see that actuarials, actuarial specialists are more employed within the insurance sector, right? And they sort of are involved in pricing of insurance products, claims, and also risk management of those typical insurance products. And one interesting evolving area is a catastrophe insurance, which is pretty much linked to climate risk management. So that's one, as I said, it's closer to my heart. So I'm also sort of interested in delving deeper into those areas. But Nitish, to answer the question, financial engineering has a more wider sort of use case in the industry. Financial engineers can work in hedge funds, they can work in investment banking, trading, or be it asset management or risk management and all that. So
Yeah, absolutely.
and also I think the one other aspect which is different is I think actuarials have to clear some exams, right? There's some actuarial exam, Nitish, which is not the case for quant finance, because there are various, I think, avenues open to upskill or learn about the theory and practice of quant finance.
Yeah, absolutely. Just one, I mean, couple of cents from my side on that actually, right? So Sujoy absolutely answered that, I mean, pretty comprehensively, but just to summarize, see the basic skill sets that are required to become an actuary and financial engineer is almost the same as Sujoy mentioned. It is about the industry in which you apply. Actuarial is mostly applied to the insurance industry, and financial engineering to the general, I mean, the banking, quant trading, risk management, and hedge funds, and again the trading and all this kind of industry, right? So it's about the application areas, that is the main difference, but the basic skill sets required is almost the same, right? So yeah, I mean, going to the next question. Next question is from Pius. So we have already answered. I will just, Sujay, for the paucity of time, I'll just like maybe summarize this answer from the answers that we have already given, right? So Pius has asked, I am a software engineer turned quant trader in equities market who wish to upskill myself and open up a trading desk of my own. So Pius, wonderful. I mean, as software engineers are like the most suitable skill sets actually to go into the quant industry, because the quant industry uses both mathematics and programming, as Srijoy has mentioned earlier. I mean, you are already a quant trader. Of course, I would rather need more details on what in quant you are actually using to guide you on what more you need to learn. But if you really want to go deep into the quant side, then again, you may add a financial engineering certificate or a degree to your to your knowledge base. Again, that can help in understanding the quant domain in more detail. But otherwise, you are doing pretty well. And I mean, maybe one-on-one, I'll be happy to understand exactly what you are doing, where do you stand, to guide you. I mean, this at this point of time, from whatever I have gathered, this is what I can say. But again, I would happy to connect and then guide you one-on-one.
And I
Okay,
would
so
just like
next
to
question
add,
is, yes, please. Sorry.
I would just like to add that, Nitish, in addition to all what you said,
Right.
definitely maybe some certifications in CFA and
Yeah.
these areas would really help him.
Yeah,
Specifically,
absolutely.
it'll be good for him to understand the regulations, especially related to the markets, the market side of
Right.
things. And as you
Absolutely.
become a trader, one aspect is the quant aspect, that is building strategies, quantitative models to drive your strategies, and there is a lot of programming tools available to help you with algo trading, high frequency trading strategies, and all that.
Correct.
But additionally, I would also advise you to take up more certifications, and also a lot of licenses required, especially in the trading area. So I think those aspects would really benefit the individual.
Yeah, absolutely. Very aptly said. Right. So next question is from Tanmay, and he says that he is currently learning quantitative trading, that is algo trading. Uh, so he says, I want some guidance regarding the career path in HFT trading companies, how to get job in top trading companies, the skills needed, etc. Would you briefly want to guide him?
Yeah, sure, Nitish. I'd say it's a very specialized field. So a lot of folks actually do proprietary trading here. And then there are also some specialized hedge funds which so employ quants to run their to run their funds. So there are all these different opportunities available, but the hedge funds typically, what I've seen is they are based in New York and London, or maybe Tokyo. So those are mainly based in those kind of cities. So somebody like yourself, I mean, somebody like the person who asked the question would either have to find a way to reach, to have an outreach to those type of hedge funds which are based in those locations, or look for if they have any sort of offshore offices in India where they do, where they would be doing some bits and pieces of the research work, or maybe some quant work related to their their funds. I don't think, Nitish, I can really sort of advise much beyond these things.
No, maybe I would like to add actually. So, in addition to what Srijoy has mentioned, right? Again, yeah, I mean, of course, most of the work happens for international banking and hedge funds and all that. But again, I mean, apart from this, I mean, you may also try to reach out to this specialized trading desk, prop trading desk, actually, which works out of India for broking houses and other institutions, right? Some of them are doing quite good work, and again, some of them work pretty deep into the HFT as well, right? I mean, again, one-on-one, you can connect with me. I can guide you more on that. But again, there are a lot of companies which in India also with a lot of trading desks who does decent amount of work in HFT areas, which also you can connect, right? But first and foremost, what I would like to mention is, or rather add is that HFT, I mean, when you say high frequency trading, right, it is more than finance, it is more about computation, right? I mean, the computer knowledge. So HFT is about how fast your machine is. So it requires, like, again, you to work with very, very high end machines. So it is like, I mean, the knowledge about both software and hardware, maybe even chip level programming, wherein you use specialized chips to trade and all that. So that's like, I mean, it requires skills as good, I mean, more than finance. It requires, I may even say that, like, again, computer skills are even more important, right? Because so if you want to go into HFT, so you should get very well trained on the computer technology side, both like the hardware and the software. Of course, like as with everything and every other team, even like for HFT teams, actually it's not like one single person working. Generally, it's like a huge team. So there's like work with a lot of people in the team, the computer science guys, the domain experts from the trading and finance, and then a lot of other people coordinate, right? But in general, HFT is more of compute power, I mean, along with the financial strategies, right? So yes, I mean, if you really want to go into HFT, so become very strong with the computation side, right? All right, so going to the next question from Vaibhav, and he says, any more opportunity related statistics and machine learning? Okay, are more opportunities related to statistics and machine learning only related to jobs in buy side? So he wants to ask that whether this opportunity gives only on the buy side, or like it's like all buy side, sell side, both.
I think Nitish, on the buy side, definitely there are a lot of opportunities for AI and machine learning, sort of skills, right?
Right.
And on the sell side also, what I'm witnessing is a lot of traders are employing AI and machine learning techniques, because now the data is so much there. So and almost all the strategies are becoming data driven now, right? So therefore, of course, on the sales side also, I'm seeing a lot of these techniques are getting increasingly used and employed. But majorly on the
Right.
buy side, especially, I can take an example of ESG, right? ESG is purely data driven, right? So ESG standards, or be it, let's say, the sustainability linked standards, which are used to assess and screen various stocks and various funds and various sort of even ETFs. So there a lot of because these are all driven by data models, right? The data on the firm's performance, including financial performance, as well as climate data and various other scores and surveys, which are actually gathered by the various stakeholders, stakeholders which are involved in the whole supply chain of that particular firm or the business or the sector. So Nitish, I think there, yes, I would say on the buy side, definitely AI/ML skills are very, very useful, and they're going to play a very, very significant role.
Absolutely. Absolutely. I hope that answers your question. Now, going to the next question from Satyam. He says that when we are saying we shall have knowledge of C++, Python, etc., do we mean we shall know the coding of the softwares, or we shall know how to use tools available in those softwares to analyze data, or shall we know both? Example,
Great
in
question.
Excel, I can use various tools. Sorry, I mean, just to complete his question. Example, in Excel, I can use various tools and have good understanding of them, but I don't know how to code in Excel. Yeah, so that's his entire question.
I think he has answered his question, I'd say. Yeah, he's actually, I mean, you can feel free to add to me, Nitish, but my answer is very similar on your lines. Again, I just didn't catch the name of the person who asked the question.
Satyam.
So
Satyam.
yeah, so I'd say yes, exactly. So the expectation is not to become a developer, a Java developer or a Python developer. We're developing the full stack app, right? So those are different. I mean, like you have IT guys who specialize in the middleware, IT guys who specialize in the data layer, IT guys who specialize on the the application layer and all that. So those are very, very sort of detailed sort of applications of in programming technology specific to IT industry. I think the expectation from a quant is rightly said to write, to sort of build models which require a good understanding of the Python libraries, right? Or
Right.
even use and especially if you are also trying to present your results, the pilot your models, and then pilot test your models and present your results to your senior management, right, or your trader. Then good knowledge of Tableau dashboards, good knowledge of tools like Power BI would be very, very useful, especially visualization of data, and then of course using all the various libraries to build models quickly. So Nitish, I would say in my during my days we didn't have the luxury of having lots of quant libraries, but now we have quantlib, right, which I saw, and it's a very
Absolutely.
sophisticated open source package. So my days we would use numerics. Numerics used to be one of the major quant software providers, and well, numerics, it's still there, numerics, and then murex used to be another, but then murex was purely a system, and numerics also has come up with its own system, so they also provide all this back end and front end and everything in addition to the libraries. So yeah, I mean, understanding how to use these libraries and APIs are more useful rather than sort of building a full stack software development skill.
Yeah, absolutely. So Satyam has a follow-up question, which allow me to answer briefly, and then you can add to that. So he has completed his FRM Part 2 also recently, and he is interested in structured finance and is now searching for jobs. So what kind of companies shall I search, which will be beneficial if you do financial engineering course from IIQF in the upcoming months? All right. So, I mean, the companies actually we both have mentioned, and in fact, actually during my short presentation also, I mentioned about the companies which you can target. I mean, that remains the same. I mean, if you do a financial engineering course, you would be either be targeting the international banks, or would be targeting the big four consulting firms, or will be targeting like the hedge funds, or will be targeting Indian banks for particularly for the risk analytics teams, or you can target the stock exchanges, and you can target independent analytics companies. There are a lot of companies which work independently to support the international banks and other people. I mean, companies like Evaluserve, VTOS, Globop, and all this as well. I mean, apart from the names I earlier mentioned. And you can be in IT companies as well. I mean, they do a lot of projects in the international banking space, right? So these are the companies you will be targeting. And I'll be happy to discuss more one-on-one, but for paucity of time, we'll go to the next question. We have already discussed this, and I'll be happy to discuss in absolute detail. I mean, if you wish to, I mean, we can connect one-on-one, right? So next question is from Abhirup, and he says that considering that many models have already been developed to outperform in financial markets, is the field likely to be very lucrative for next 30-40 years? So that's his question.
Oh, great question. Abhirup, thanks. When I started my career that time, there was only one factor, maybe two factors or three factors, as we all know, in the investment domain, and they were popularly known as the market, the index, right? And then you had the momentum, which is like long short strategy, and almost 90% of the firms during that time, the hedge funds, they would employ some variation of long short and some sort of passive investing, kind of strategy, along with, of course, the size. So we're going long on the, sort of size factor, the size effect, and
Right.
of course, there was, I think, one more additional factor called value, which came up later on. So, value was sort of a risk factor or a beta that was not discovered before, and then they discovered value. So now, so this field keeps evolving, Nitish. So there is no sort of so new risk factors keep getting keep sort of appearing, and old risk factors disappearing, right? So
Right.
that is a nature of financial in the engineering. In fact, now there are a lot of I actually read a lot of research papers about the impact of ESG, and how ESG is also considered as a smart beta, that is another beta which is emerging, right?
Right.
So ESG companies are I mean, there's some statistical study which was done, and they sort of noted that ESG companies which rank very high on ESGs, they have lower risk premiums. So therefore, their valuations are supposed to go up. But so far, the market
Correct.
correction hasn't happened, right? So all these interesting factors are emerging. Especially climate risk is playing a major role in the in the repricing of these financial instruments. And so, as I said, this is an ever-evolving field, and the moment we think that the model has been saturated, is almost dead, suddenly a new model will emerge. That is my 2 cents.
Absolutely. Very, very well summarized and very well answered, actually. Quickly going to the next question. This is from Piyush. And Piyush says that, hey, Srijoy, that was extremely insightful. It really got me excited about the climate risk management. I wanted to
Thanks.
understand, for someone who sees quant finance as an opportunity to build his own business, what sort of experience should I get, and any possible careers where I can gain this knowledge? So was the
Can I ask a
question clear,
follow-up
or shall I
question?
repeat?
Yes, I think the question is good. It's clear, but can I ask a follow-up question as to what kind of business Piyush wants to build?
Yes, Piyush, would you like to mention that? Piyush, if you're there, would you like to answer? Okay, he says that I am the guy who wanted to start his trading desk.
Okay. Yeah, I think it's the question is pretty similar to somebody else, I think, that we answered earlier, right? So
Right.
I think you also gave very very good nuggets of advice. So maybe that same advice will apply here. But in the context of climate risk management, as I said, Piyush, so the financial, if you just identify the new trends, I think I spent some time on the last slide of my presentation where I discussed fintech and then blockchain, for example, and how the finance is becoming decentralized, and how different blockchain technology is being used to completely transform the the paper-based financial contracts to digital contracts, right?
Correct.
And then aspects like AI and ML, where AI ML have brought a good example is Zerodha, and then there's also, that's an Indian company, and then there is also a European company called Robinhood, which has brought, right, Nitish, brought the portfolio management, trading, and all that to the to the doorstep of the retail investor. So anybody can sort
Correct.
of anybody can download that app on their phone and then start trading. And it also allows you to create your strategies, and very interesting, a lot of features are there, right? So
Correct.
all this is being enabled purely by AI and ML, right? So AI ML allows us to analyze tons and tons of digital data about stock markets, and sort of feed that back to the investor, so that they can intelligently sort of select, use that for stock selection, or be it, let's say, security analysis and all that, and also risk management. So yeah, to answer
Yeah, absolutely.
yeah, so I answer his question broadly, yes. I mean, I think you need to identify the trends and then decide in which business you want to get into. right? And then accordingly, maybe you can, I think Nitish can help you to take the right kind of upskilling initiatives.
Yes, absolutely, absolutely. So Srijoy, I mean, is it okay if we continue for like maybe 7-8 minutes more? And like again, there are a lot of more questions because most of them are repetitive. I mean, like quickly, another 7-8 minutes is okay.
It's a
Or
pleasure. I think I have a hard stop at 2 o'clock, and I'm absolutely fine, Nitish.
yeah. So then again, let's take the follow-up questions. I mean, the following questions very quickly, and like again, maybe in one-liner, two-liners, and for more broader discussion, I mean, I'll be happy to actually connect with them. And again, so Sejal has a follow-up question: how is machine learning for finance different from data science? Would you like to quickly answer that?
It's a tricky question. Yeah, I think so. Machine learning in finance, right? As we sort of stand in terms of the current landscape, we see that machine learning is increasingly used in trading strategies. Especially I
Correct.
discussed algo trading. It's also
Right.
increasingly used in portfolio management. So one good example is sentiment analysis, right? So so there are these one of my actually colleagues, batchmates rather, he has set up his own startup where they actually analyze stock market sentiment. So they look at the Twitter news, they look at all these social
Yes.
media messages, and this is all sort
Correct.
of unstructured data. In addition to all the pricing data that we have from the markets, Reuters and Bloomberg, this is the additional unstructured data, and that also includes images, right? Images. It could
Correct.
include all these conversations and Twitter feeds and chats between the traders. So it takes all that and uses that to build sort of a sentiment-driven, stock selection strategy or investment advice. So those are the interesting sort of advancements happening, that interesting applications of machine learning in finance. We are also seeing a lot of use of machine learning, especially in data quality management. And this is,
Right.
I'm talking about the risk data. For example, the counterparty risk models and the VAR models, they consume tons and tons of price data and volume data and all that, right? Which goes in, which feeds
Absolutely.
into these big risk models or the risk engines of the banks. But that is another use case. Whereas data science is everywhere. I mean, data science applications. I know an example, Nitish, where one of the insurance companies actually hired PwC as a client. I should not be sharing all the details as a client. So I think we completely re-transformed the claims process by taking sort of the way they were doing their whole process of identifying claims through pictures from different. So typically what happens is if there is an accident or something, then somebody sends the pictures, right? So we were able to
Right.
design data science techniques to analyze those pictures, and then sort of develop a more accurate prediction of how much a cost would go into, or how much what would be the value against those claims, those damage claims.
Correct.
So data science
Absolutely.
is everywhere, Nitish. Data science is everywhere, and data science is sort of its application is on the customer operations, applications in retail products, in consumer business, sort of in customer business analytics. All these various broad aspects of applications of data science.
Yes, absolutely. All right. So I will quickly take up those questions which requires your presence, and then again maybe I'll continue for 10 more minutes. I mean, you may leave at 2 o'clock. So essentially, so the next question is from Neeraj, and he asked, how advanced should be my C++ to be to get a job in this field? Were you able to hear my question?
Yes, Nitish. Yes, I think C++ is for me, it's like a bread and butter of a quant. I mean, I'm still a fan of C++ because if somebody were to go back 10 years back, rewind the clock and look at all the financial engineering practitioner handbooks and textbooks, Nitish, they would all be written in C++. So any pricing
Absolutely.
model, you'll find that they were written in C++. In fact, I was teaching the earliest I remember the IIQF courses. I was teaching C++ in some of those modules, I remember, right? So, but over time, Python has become more popular, has taken over C++, and rightly so, because Python is easy to code, and it also provides the same kind of features like object-oriented programming and all that, which C++ provides. And with Python, you can also build the front end and the back end and everything. So, I mean, you can also build a system using Python, not just the models, right? So yeah, I mean, going forward, I think, Neeraj, focusing on Python makes more sense to me. But as I said, C++ is not just a language; it's a concept. So the principles of programming in C++ are applicable everywhere. So I mean, if I were you, I would focus some time on, spending some time on understanding the principles of programming, design patterns, for example, which are very wide, very nicely described and discussed in C++, and which you can always, Nitish, you can always sort of transfer that knowledge to any other programming language.
Yeah, absolutely. Absolutely. It's a very well summarized, Srijoy. And Neeraj, actually, I will take up your other question in like few more minutes. I mean, regarding your the comparison between certificate programs and master's degree. But again, I think actually I can take up that question later on, and I'll add on to what Srijoy has said. But like, since he has a hard stop at 2 o'clock, so let me take like one or two more questions that require his presence, and then actually I will take up your question and some of the other questions. So next question is from Srinath, and he says that, do you have any insight on the application of risk management in energy sector and its relation to climate risk management?
Absolutely, Srinath. I think, as I said, I can share with Nitish a few references. I discussed the climate scenario stress testing pilot study being done by the US Federal Bank, right? So that's a monumental event, I would say, because Nitish, that will set the tone now, because eventually going forward, all the banks will have to perform climate risk-related stress testing. So they have to incorporate the climate risk management into the overall enterprise risk management framework. And goes without saying that there are a lot of challenges, especially trying to model climate physical risk data, right? Because there are amazing challenges there, and some certifications like CFA. I think CFA has its own certification on climate risk management, and GARP has its own certification on climate risk management. So those will be very useful certifications to gain knowledge about these areas. And going forward, as I said, Nitish, climate risk management is going to be the most focused area of risk management.
Right, absolutely. So last question for you, and then actually the rest of it I would take it up. I mean, this is like a very contradictory two questions. One, I mean, which are like there one after the other. One is from Yash, and he says that while I was researching regarding financial engineering, the demand for FE engineering is reducing since 2008. How far does this stands true? And the next question is from Rohan Siller, and he says, as an quant analyst, Indian market and world market is exponentially increasing, or what is your view in terms of growth? So that this would be an apt summary on like in the progress of the industry and like how it is going forward. And then actually I would leave you. Apologies, actually we got a little extended in time, but yeah, I mean that is something. This is like one question I would request you to answer.
Yeah, I mean it's actually contradictory, very interesting question, like two sides of the same coin.
Yeah.
As I said, financial engineering, the moment we feel that the demand is dwindling, suddenly, a revolution happens and we see innovation exploding and multiplying. So ESG, climate risk management, and just, this is just the tip of the iceberg, Nitish, because a lot of work has to be done there, lots of work, because, we hardly understand what climate models are. There are a lot of there are French companies, there are American companies, and Japanese companies who are focusing on the data sets for climate risk models and how to. I showed an example, Nitish, in my case study, right? How the climate risk drivers sort of financial risk, like credit risk or market risk, right? And liquidity risk and all that.
Absolutely.
So there are very challenging aspects which need to be right. And then plus, as Rohan rightly said, right now, I think model risk management is something that is driving the demand for quant skills. And plus, I will also add, Nitish, one more thing that India as an economy is, I repeat the same thing that I said at the very start. India as an economy is, is at a crossroad, right? From here, if we grow to from a 3 trillion to let's say the #2 economy in the world, then clearly we will have a very strong financial system and a very innovative financial system, very similar like what US has, right, to support the growth of our economy, and the financial products will just explode. So fintech again is one of the areas which is just sort of seeing that kind of spurt. But eventually we'll see that RBI will start to play a major role. So RBI, the Central Bank of India, will have to build a strong regulatory framework which is risk driven, just like the US Fed. So that means RBI will have to employ many quants, right? Like all the central banks. If you look at the industrialized countries, central banks like US, UK, right? They have their own quant teams, right? Who sort of focus on building supervisory, scenarios, stress testing scenarios, and supervisory quant models to review the health of the financial system, as well as to supervise individual financial institutions and all that, capital soundness and safety, as they say. And then with the Basel III, Nitish, one more thing I want to add before signing off. The Basel III, is a huge reform now. So that is which is called as FRTB. So once FRTB comes into play, once that gets rolled out to not just in US and UK, but through the entire globe, including India and other countries, especially the democratic countries, you'll see a huge sort of demand for quant skills. Right, all the banks will have to sort of upgrade their risk management policies, risk management strategies, and of course the infrastructure to support the Basel III implementation.
Yeah, absolutely. So with that, actually, I mean, I would let you go, because again, I mean, the participation has been massive again. I mean, the questions have been, I mean, interaction has been like, I mean, pretty encouraging from the participants, and a lot of questions, so which actually we had to take. Thanks for your patience and again answering all these questions. We still have some more left, but again, most of this actually, I mean, probably I would answer them. I mean, but I would, as I said, I mean, I would let you go. I mean, thanks so much for joining, and like, thank you so much as always for a very insightful session, and for all the very insightful and wonderful answers. So look forward to have you again soon, and like again, all the participants would look forward to hear you once again very soon.
Thank you, Nitish, and it's always a pleasure to be a part of IIQF webinars. And Nitish, I always wish you and Abhijit very well on your journey, because I have seen how we started and where we are. So I think and the questions that the participants are raising is amazing, because I just feel that we are just there like a tipping point where there is a lot of awareness which has grown around financial engineering. And the applications of financial engineering is just immense. And I just hope that all of you in the audience just take your own initiatives. Rome was not built in a day, Nitish. I'll always say that. Take your own baby steps and try to take the right steps under the right guidance. And I'm sure you'll be able to see how to achieve your own goals and strategies. Thank you very much.
Thank you so much. Right, so the rest of the questions actually, I mean, I'll be taking. So essentially, those who have put up their questions, please be with us, and then I'll be answering the questions for maybe like again another 10-12 minutes because we still have some more questions to be answered. So coming back to the question from Neeraj, I mean, you have also asked like, how is the certificate in financial engineering courses or course different from a master's in quantitative finance in terms of depth, skills required for a job as an analyst? So Neeraj, this is my take. Okay, and if you can afford and go for like a good financial engineering master's degree program, there is no doubt that that would be a good option. That is absolutely no doubt about it. But see, I mean, going for like a full-time master's degree program, particularly when financial engineering masters are best like done in the US, right? It's like a huge amount of money and time involved, right? So I mean, if you can afford it, and I would only recommend you go for the top 10 12 universities only if you are wanting to go for financial engineering, because beyond that it will not be really worth your time and money, right? And other thing is, see, basically, I mean, our certificate program in financial engineering, I mean, it's intense, and it covers more than about I'll say an 80% of what is covered in like a master's degree program in financial engineering. Where a master's degree helps or like has the advantages is the advantage of time, right? So essentially, whatever is taught in the same field, it's being a full-time 1.5 year degree program. So you have the luxury of like spending more time on the theoretical mathematics, statistics, and all, right? Which actually is like a little difficult to gives that much of time in a financial engineering program. But said that, I mean, over 15 years we have worked very hard on this program, and again we have actually with a lot of iterations and improvement, we come to a point that actually we are able to teach things very effectively, though actually we are teaching in a lot less time than a financial engineering masters. But nonetheless, it's like still like a very comprehensive course of 7 months, having 320 hours of lecture. But yeah, I mean, and it's like covers all the major concepts in like relevant mathematics, statistics, stochastic calculus, numerical methods, building the background in finance, and then doing the applications in terms of actual derivative valuation and pricing of each of derivatives, assets, and all. And in terms of the risk models, also the theory and understanding. So it is, I mean, almost as effective. But yeah, I mean, if you can afford a master's degree program, I mean, of course you can. I mean, I cannot compare a very good master's degree program. I'm not saying, I mean, a lot of the general MFE programs, I would say it's in a certificate program in financial engineering, it can be definitely better, right? But again, if you can afford and you can get an entry into the top 10, top 12 colleges in US, and some of the other top colleges in like Europe, and like maybe a couple of them in Singapore, you may definitely go for that. But again, this is pretty effective in itself. The certificate program in financial engineering we do, particularly since this allows you the luxury to do this program along with your job. So you don't need to leave your job and go, and still the learning is almost as effective, right? And again, a lot of people have utilized this to go into or join quant teams, or like again, if they're already working, they go into deeper profiles. So that's my answer. And then the other question of yours in the C++1, the Srijoy has answered already, right? Hitesh has asked whether placement assistance is provided. Yeah, absolutely, Hitesh. Definitely, we have a placement support team. If you complete the courses successfully, we would be happy to help you with connecting you to the right companies. Okay, now going to some of the other questions. Now, next question is from Sandesh, and he has asked, is it possible for someone to move to finance domain who is not from finance background, and also who is also do not have knowledge of machine learning, etc.? So Sandesh, I would actually need to have a better understanding of your background to answer that. But in a general answer is, finance engineering as a discipline, in fact, actually is very suitable for people who are from engineering, mathematics, statistics, or other quantitative background, with like science and with mathematics and economics. Because this, like as Srijoy as I mentioned in the beginning, the core skills or knowledge areas that like you need to become a good financial engineer is like, I mean, you need to be good with mathematics and programming, right? So if somebody is strong with mathematics, they always have a very good chance of entering into this particular domain of finance, which is financial engineering, or what you may call it quantitative finance. Yeah, of course, the other things, like depending on what kind of profile you want to build, the relevant finance knowledge has to be picked up. Or if you are, I mean, if you want to go into machine learning, you have to pick up the machine learning knowledge as well. But overall, in a general answer is yes, this field of finance engineering, particularly in finance, this is very suitable for people who are strong with a strong quantitative background. That does not mean that people from finance background cannot make a career in this field. They can also make a field career I mean, with right amount of knowledge, if you can pick up, right? So yes, I mean, even if you do not have prior finance background or prior machine learning background, you can still make a career if you are good, I mean, having a good knack of quants and programming, or if you are not having that, if you are willing to learn that, right? Next question is from Ashok, and you had mentioned you will be covering valuations. Is it equities, or you will be covering valuations of credit derivatives? So Ashok, when we mention valuations in context of financial engineering or quant finance, here valuations means valuation and pricing of different derivative instruments. So I mean, any good financial engineering course should cover the valuation and pricing of, I mean, using mathematical models for different derivative instruments, be it the equity derivatives or interest rate derivatives or currency derivatives or commodity derivatives or swaps. So all the derivatives, I mean, as you might know, that like again, these are all valued using very complex mathematical models. So as with any good financial engineering course, our financial engineering courses also teaches the valuation and pricing models, both the theoretical understanding of the models and then actual implementations of the model in Python, right? So when I refer to valuations, and we would be referring to derivative valuations actually of different asset classes. As I said, equity derivatives, interest rate derivatives, currency derivatives, commodity derivatives, credit derivatives, and all that, right? So next question again was Sandesh has also asked about placement support. Yes, Sandesh, we definitely have placement support. Would be happy to discuss in more detail how that works. I mean, how our team can help you and guide you if you have learned any of these courses properly and successfully. We would, or rather, I mean, we can also have a one-on-one discussion if you wish. I mean, we can connect over call. And then Praveen has said, I've recently completed my master's in financial economics and want to start my career in quant field. Is it possible for someone who have no experience? Again, Praveen, already answered. Given that you have a master's in financial economics, so yes, you have a very good background to make a career in this field, particularly, I mean, on the risk management side, which involves a lot of statistics in the modeling, right? So a lot of people from economics, I know they have very successful, they are in very successful career in the field of quant, particularly in the risk areas. And yes, you definitely can make a very good career in international banks and all other companies in the quant and the risk analytics domain. As I said, again, I'll be happy to answer and discuss in more detail one-on-one. Okay, next question is from Mukunda. He asked, I have around 7 years of experience in credit risk appraisal, but trying to switch in model development and validation roles. But so many interviewers ask for prior experience in same domain, how financial engineering or quant finance can help. So, I mean, Mukunda, the first thing is it is very natural for the interviewers to ask background in relevant areas because you are not a fresher, right? I mean, if you are having 7 years of experience, then again you are definitely applying. I mean, you cannot apply for fresh positions, right? I mean, you are applying for a position in at least in the middle level areas, right? So relevant experience is can be asked, right? But said that, I mean, a lot of people have changed profile as well, as long as they pick up the right skill sets. I mean, there are a lot of courses available. I mean, as we have mentioned, we have also very deep courses in this field, like the quantitative finance and risk management course is something you can look at. If you want to go into more deeper financial engineering aspects, you may look at a course of certificate program in financial engineering. Or again, if you are interested in the machine learning applications, you can look at the machine learning in finance course. So this course helps you in mitigating the lack of experience that you have by getting the relevant domain knowledge, because these courses are pretty deep and I mean, gives you knowledge about both the deep theory as well as the practical modeling, which is definitely helpful in mitigating the non technical experience you have, right? I mean, once you acquire the skill sets, of course, I mean, you apply then you are in a much better position to shift into this kind of roles. I mean, vis-a-vis applying for these roles without any proper training, right? So yeah, proper training and knowledge enhancement can definitely help you. Well, coming from next question is from Siddharth. What is currently the best master's break into quantitative trading in India? Siddharth, that is the unfortunate part. In so many years, we still do not have a good master's degree program in India, which actually helps you in, I mean, in specifically in financial engineering. There are few courses here and there. There's one course conducted by CMI, Chennai Mathematical Institute. You can, there are a couple of more courses as well. But unfortunately, I mean, if you're looking at a financial engineering master's degree program, it is still the best courses are in US. You can look at their top 10 colleges like the Carnegie Mellon or Baruch College, or like again, I mean the Georgia Tech, and I mean the next. I mean, I can send you the list of best financial engineering courses available worldwide. There are a couple of them in Singapore as well. I mean, nearer to us, or like again, one in Hong Kong, conducted by the Hong Kong University as well. Couple of them are good courses are there in I mean Europe as well. I mean, couple of them in England. I mean, Bocconi has a good courses, but unfortunately, none of this. But none of the master's degree program in India actually are actually very good in this field. That's the unfortunate part, very honestly speaking. I mean, if you can't leave your job and go for a course abroad, then again, I would not recommend it to you to actually go for a master's degree in finance engineering in India. Of course, like again, you can do relevant other related master's degree. You can do a master's degree in applied mathematics or something, and which may not be the direct domain knowledge, but again, it can be like at least gives you the core knowledge, right? Otherwise, you can do the certificate programs which prepares you specifically for this fields, right? So that would be my suggestion. If you want to go for master's degree, then actually I mean, it has to be the international master's degree program, or you can do from some relevant master's degree, but not in financial engineering. I mean, as I said, you can do something in applied mathematics, or like again, financial econometrics or economics and all that, right? So some things like that. But again, yeah, we do. That's how it is. Next question is from Rohan, and he's a chemical engineer. Rohan asks that I'm a chemical engineer currently working in TCS as a data engineer. I have 1.5 years experience, and I want to start my work journey towards quant research and analysis, which are the requirement step, and what I have to terms of learning. So, I mean, if you want to become a quant, focus on learning the mathematical modeling and building a mathematical background, and learning the financial engineering and quant concepts. I mean, you can look at doing courses in financial engineering. As I said, we have a couple of courses which you can look at. Maybe the certificate program in financial engineering would be the most suited one. And I mean, if you wish to discuss with us or our team, please connect. We'll be happy to discuss on that. But again, you have to acquire the financial engineering quant domain, or financial engineering or quant domain to basically to make a move, right? So that is something I would recommend. All right, so quickly going to the next question. Okay, so next question is from Ashok, and he says that I will work with structured finance. We'll be covering how each product in derivatives, IR, FX, currency built. Yes, Ashok, precisely. So we will be covering each of these products. We will understand the models which are used to value and price each of the derivative assets. I mean, interest rate, credit derivatives, equity derivatives, and currency derivatives, commodity derivatives. So we'll understand the models in deep, both the theoretical understanding and then the actual implementations and the modeling as is done in the industry. We cover all these aspects in deep, and that is exactly what you'll be learning. Any financial engineering course should be concentrating on that, and again, our course also does that in pretty deep. So going to the next question, yeah, and before going to the next question, again, if you wish to discuss in detail, I'll be happy to answer, I mean, in a more or discuss in more detail, I mean, you may connect with us over a call, and I'll be happy to discuss in more detail. Going to the next question is from Sailendra, and he asks, and I'm PhD in chemical engineering, wearing as FSE IM engineering college, but have no experience in derivative trading last 5 years. I want to shift my career in finance engineering. Can I get sure placement if I do a course? I mean, yes, of course. So essentially, we have a placement support team, and you have a very good field and also the general background. So I mean, PhDs in most of the areas, again, they are quite valued of in the quant domain. So if you have an interest and you acquire the domain knowledge, then definitely you may actually I mean make a career shift. And again, I'll be happy to discuss one-on-one. Next question is from Gayatri. She is doing a master's in UK, and I am from mathematical background. I am currently doing my business degree in UK. I wish to enroll in CPQFRM course. Kindly give me a clear idea how an Indian certification will work in UK and what skills should I develop. Now, Gayatri, I mean, I'm not sure what is like meant by an Indian certification, because our courses are targeted at the entire global financial engineering industry, right? So, I mean, these are not limited to only applications in Indian financial institutions, as we have mentioned many a times in during our discussion earlier today also, that like again this knowledge is applicable to all international banks, hedge funds, international trading desks, all banking, other banking banks, and again financial institutions throughout the globe. I mean, financial engineering knowledge is not limited to India, right? So essentially, I mean, this is something which is applicable to I mean, work in financial engineering anywhere in the world. So I mean, in fact, actually, I mean, this course actually have helped people in moving to international banks and other, I mean, other financial institutions for quant and the risk analytics jobs. So you can pretty much use this knowledge to apply anywhere. I mean, why only to limit to India? And again, would be happy to discuss in more detail on this aspect, Gayatri. So please feel free to reach out. Okay, so next question is from Anjan, and he has asked how communication is important to FE. So Anjan, to be honest, it is not about FE, but communication is like a very essential skill set that is required to perform in any job. I mean, in fact, actually, I remember about maybe 18 years back, one of the leading quant luminaries in the world, Mr. Rajan Gadkari, he was taking one physical seminar in Mumbai, which we have organized. I mean, I don't remember the exact year. I mean, it was about like maybe 18 years back. So essentially, he has categorically first started with mentioning that before going into the core areas or the knowledge that is required to become a financial engineer, he stressed upon the point of like how communication skills can be helpful, right? So communication skill is a very basic skill. I mean, that is helpful while applying to or other when you want to work in any domain, right? So it's not essentially only financial engineering. Any job that you want to perform, financial engineering or anything else, right? So communication skill always helps. If you have a good communication skill, I mean, you can communicate with your peers, maybe your clients and other people in your organization. So that's like a very essential skill set. All right, Richard. Yeah, I'll also be happy to connect with you one-on-one. I mean, I'll send you I'm just sending you my official number. So please feel free to connect. So this is my official number, Richard. Please feel free to connect with me at your convenience, or you may let us know if any per convenient time which you want us to connect, we'll happy to connect. Okay. Again a question from Hitesh on like the placements, and he has asked like, can IQF help me in landing a job on myself? So Hitesh, yes, we do help with we do have a placement support team which help you in connecting with the right companies if you successfully complete any of these courses. Again, we'll be happy to discuss one-on-one, but yeah, definitely there is a placement support. Next question is from Himanshu. Himanshu has said that I am Himanshu, CFA level 2 candidate working in IT service sector. How difficult will it be for me to get into quant career if I choose to go for MS in financial engineering? If you can if you can do masters in financial engineering, definitely there is a very good chance of you making a career in financial engineering. There is no doubt about it. I mean, you can look at other certificate courses as well. Now, next question is from Abhishek, and he has asked, sir, commerce background and working in invoice process, which skills should I start with? Start with picking up more deeper, I mean, mathematical, statistical, and programming skills, because if you want to work in quant finance, these are things you would need to understand. I mean, you might look at some of our courses like quantitative finance and risk management as well. If you can do it seriously and I mean, you can complete that course will also give you quite a good amount of adequate knowledge to pursue a career in this field, particularly in risk management. Now, going into next question, Mukund says, okay, we have already taken this question, Mukund, which is just answered. So going into the next question. Vaibhav, your question is like a little specific, so we will answer that question one-on-one later on. Tanushri has asked, hello sir, I am working for a broking firm for a long time as a equity derivative dealer, coming from general science background, having no technical background. Can opting this course help me upgrade my career? Is there any age bar to learn this course? Tanushri, no, there is no age bar. And you coming from a science background and you already working in the market, if you can pick up the skill sets well, you definitely can start targeting profiles related to the quant industry. But again, I would like to understand in maybe in a one-on-one discussion where you stand, and then you can connect with us, and we'll be happy to discuss in more detail. But yeah, of course, I mean, if you pick up the skill set, then you can. Neeraj, again, I've already answered that question regarding the age bar. So yeah, I mean, to transition into data science and engineering background to quant, I mean, anyway, I need to understand in more detail. But again, overall, yes, if you apply the skill sets, there are a lot of profiles which uses a combination of knowledge of like data science and financial engineering, right? So essentially, if somebody is an expert in machine learning and data science, there are a lot of avenues and roles in financial engineering which you can target after building a knowledge base in financial engineering. So yeah, you definitely have a good scope. So I mean, at any age, actually, you can target a move. But again, as I said, it would need a more detailed discussion to guide you more on that. But yeah, I mean, in general, yes. Bukolo has asked, is there program financial engineering available fully online? I mean, all the courses that we do, Bukolo, as I have mentioned earlier, also are through online live interactive sessions conducted on the weekends, that is Saturdays and Sundays. And you can do this course from anywhere in the world as long as you have an internet connection and a computer, the desktop or laptop. You can join the course from anywhere. Yes, people do join our courses from across the globe. So yeah, please, you may also do it from anywhere. And Dennis Very has asked, sir, actually I'm undergraduate student, BCom, so can I join this course? If yes, how to manage both the courses? We allow final year students to join our course with the caveat that you can complete our course and then you can complete the projects and all. I mean, but the final certificate you will be receiving once you are a graduate. But yes, before that, you can actually definitely you can join our course in our final year of graduation. As I said, again, would be happy to discuss one-on-one, and then understand and then guide you on which course you should be taking it. But yes. All right, Bukolo. I mean, we also have tried to reach you, but couldn't connect to your number. So essentially, please, we will try again. And but this is my number, direct number. So I mean, if in case you wish to have a discussion, then you may also reach out to me directly on this to discuss about the available courses according to your background. We'll be happy to discuss and guide you, right? So with that, actually, I mean, uh, we have come to the end of the session. I mean, yeah, I mean, the participation was massive, actually. I mean, I would really thank all the participants for your patience, and again, all the questions. It shows that, like, again, how involved you were. We always want the sessions to be interactive. Yes, we have exceeded our scheduled time, but again, the sessions are conducted for the benefit of all the participants. So we generally try to take up and answer as many questions and queries that actually we can, right? So I mean, so I hope you all found the session to be informative. And as I have mentioned, I mean, for those who wish to discuss any of these aspects in more detail, please feel free to directly reach out to us. We'll be happy to discuss one-on-one on all the questions, right? So with that, let's close the session for the day. Thank you once again, everyone, for joining in. And as you all know, we conduct sessions on various important topics related to financial engineering, quantitative finance, risk management, algorithmic trading, machine learning, and all areas related to advanced financial analytics in a irregular intervals. So, I mean, we would be happy to see you again in all the next webinars. You will receive updates over email for all the new webinars that we schedule. This will all be updated in our social media handles, website as well. So please feel free to register and join and attend the next sessions as well. With that, I'll take your leave and we will conclude the session for the day. Thank you. Thank you so much.